So, welcome back to the session of financial management. And as you are aware that we are in the second unit. Up to this, we have discussed three different components of unit number four. Okay, the first component, that is sources of finance. We have equity, share capital, preference share capital, debt capital, and internal sources. These four are the sources of finance, sources of capital. Then after we have discussed the practical aspect of this unit, and that is cost of capital, cost of equity capital, cost of preference capital, cost of debt capital. And in this week, we have tried to understand the capital structure, meaning, concept, types of capital structure, factor affecting the capital structure, and lastly, we have discussed the theories of capital structure. And then after we have started the discussion about the leverage, the second practical aspect of this unit. First is cost of capital. Now we are in the second point, okay, and that is all about leverage. Already we have discussed the meaning of leverage. Okay, so leverage means when company using a fixed cost assets, okay, or fixed fund assets at a time company have leverage. So leverage means use of debt capital in the capital structure of the company, like this. Okay, employment of an asset or a funds for which the firm pay a fixed cost or fixed return. So leverage means a use of fixed cost, fixed return securities in the capital structure. Then after we have seen the types of leverage. There are three types of leverage we have. First leverage is financial leverage, second operating leverage, third one composite or combined leverage. And then after we have started the discussion about the number one, operating leverage. I think so. From this slide, our discussion is pending. Okay. So the leverage associated with the investment activities is called operating leverage. Here, operating leverage means a leverage which is related with the investment activities, where to invest. If the question comes where to invest, then this leverage comes, which operating leverage. Or it may be defined as a company's ability to use fixed operating costs to magnify the effect of changes in sales on its earning before interest and tax. So, operating leverage, simply we can say that use of fixed operating cost. Fixed operating cost means use of fixed cost. Suppose rent of factory, rent of building, okay, salary of employees, salary of manager, depreciation. So this all the expenses are fixed in this. So when company use the fixed operating expenses to m- measure the effect of change in a sales on its earning before interest and tax. Earning before interest and tax means operating profit, profit before interest and tax. So this operating leverage represent the ability to use of a fixed cost, and also it's help us to define the effect or determine or measure the effect of change in a sales on company's profit. If the sales increase, what will be the percentage changes in the profit? Are you getting my point? अगर सेल्स इंक्रीज होगा तो प्रॉफिट कितना इंक्रीज होगा, अगर सेल्स डिक्रीज होगा तो प्रॉफिट कितना डिक्रीज होगा, वो हम किसकी हेल्प से कैलकुलेट कर पाएंगे? विद द हेल्प ऑफ दिस ऑपरेटिंग लीवरेज. आर वी क्लियर? बहुत ही सिंपल है. इट्स डिफाइंड एज number one, use of fixed operating cost. Number two, it's measure the effect of changes in sales on profit. This operating leverage have two different important cost. One is fixed cost. Fixed cost means cost remains same in respect of output or production, rent, salaries, all this. And variable cost means cost which is vary with the production, vary without material cost, labor cost, packing cost. Okay. So this entire operating leverage is depend upon two costs, fixed cost and variable cost. Moving ahead, sorry. Now read the first point. It is very, very important for all of you because we need to conclude the practical questions based on this one. When company is said to have high degree of operating leverage if its employ a great amount of fixed cost and smaller amount of variable cost. If suppose in any company, if we find more amount of fixed cost, suppose one company is there, Mr. Ram Limited. In Mr. Ram Limited, variable cost of a company, suppose 20,000, okay, and fixed cost of Mr. Ram Limited is suppose 30,000. So whenever the fixed cost is more than the variable cost, at a time company have high degree of operating leverage, and high degree of operating leverage means company have more risk. This chain cycle is clear. High degree of operating leverage means high risk, high fixed cost. तीनों हाई होगा, फिक्स कॉस्ट भी, ऑपरेटिंग लिवरेज भी एंड रिस्क भी. Thus, the degree of operating leverage depend upon the amount of various cost structure. Here, cost structure means fixed cost and variable cost. And operating leverage can be determined with the help of break-even analysis. We will understand this one in a practical question. Okay. Now, write down the formula. Everyone, I request all of you to please write down the formula. Formula for operating leverage: OL is equal to C upon OP. Here C stands for contribution and OP stands for operating profit. In some of practical question, contribution is given to you directly. In some of practical question, it is not given to you. So in that case, you need to find the contribution. Here contribution is equal to total sales minus total variable cost. मैंने चैट बॉक्स में वो लिखी है, प्लीज नोट डाउन द सेम. Contribution is equal to sales minus total variable cost, or else contribution is equal to profit plus fixed cost. You can use any one formula to find out the contribution. Are we clear about the contribution? Good. Now operating profits. Okay, your operating profits OP means प्रॉफिट बिफोर इंटरेस्ट एंड टैक्स, जिसको हम पीबीआईटी कहते हैं, प्रॉफिट बिफोर इंटरेस्ट एंड टैक्स. Okay, now this is only the operating leverage. Now the degree of operating leverage, you write down the formula. I will explain the concept. Okay, degree of operating leverage means percentage change in a profit due to percentage change in a sales. Suppose there is an increase in the sales by 20%. 20% increase in sales. As 20% sales increase, profit will increase by 5%. Further, suppose in the next year, if the sales will increase by 40%, what happened with the profit? the sales will increase to 40%, what will happen in case of profit? Increase in profit of 10%. Very good. Are you clear about the concept? It's represent the change in a profit due to change in a sales in terms of percentage. Write down the formula. DOL, degree of operating leverage, is equal to percentage change in a profit upon percentage change in sales. Reverse to that. If the sales will decrease by 40%, ultimately profit will decrease by 10%. So this 40% and 10% represent the degree of operating leverage. Formula done? Okay. Now we go for practical question number 1. Look at the question. From the following information, determine the degree of operating leverage or calculate the operating leverage. And also answer the question, which company has greater amount of business risk? Why? Detail is given to you about company A and company B. Two companies are there. For company A, sales is rupees 25 lakh, and for company B, sales for rupees 30 lakh. Fixed cost is also given to you. For company A, 7 lakh 50,000, and for company B, 15 lakh. Variable expenses as a percentage of sales are 50% and 25% respectively for company A and company B. Three information is given to you: sales, fixed cost, and percentage of variable expenses. Are we clear about the question? क्या करना है वो clear है? We need to find operating leverage based on this information. This information means information about the sales, fixed cost, and variable cost. Okay. Now, please write down the formula for operating leverage in chat box. OL is equal to C upon OP. Very good, Jenny. C upon OP. So first of all, we need to find the C. C means contribution, and contribution is equal to sales minus variable cost. Sales minus variable cost. First, find out for the company A. For company A, sales of company A, how many rupees? It's 25 lakh. Very good. Minus variable cost of company A. Look at the last line. Variable expenses as a percentage of sales are 50% for company A. So 50% of sales, and total sales is 25 lakh. So 50% of 25 lakh, you will get the answer 12 lakh 50,000. So for company A, contribution is 12 lakh 50,000. Are we clear about the C for company A? Okay. Now we calculate for a company B. The same formula is applicable. Sales minus variable cost. And for company B, look at the sales amount. It's 30 lakh. So 30 lakh minus total variable cost, and that is 25% of total amount. So total amount is 30 lakh, and 25% of 30 lakh means 7 lakh 50,000. So here for company B, contribution is 22 lakh 50,000. So for company A, contribution is 12 lakh 50,000, and for company B, contribution is 22 lakh 50,000. Now moving ahead for operating profit, OP. How we find the profit? It's very simple. Total income minus total expenses. So here total income minus expenses matlab sales minus total cost. Operating profit is equal to sales minus total cost. The total cost means both the cost, variable cost and fixed cost. So for company A, sales amount is 25 lakh minus minus fixed cost 7 lakh 50,000 and variable cost for company A 12 lakh 50,000. Just we have calculated. So ultimately 25 lakh minus 7 lakh 50,000 minus 12 lakh 50,000. So profit for company A is equal to 5 lakhs. Are we clear about the profit? 25 lakh minus 7 lakh 50,000 minus 12 lakh 50,000. Now we go for the calculation for company B. For company B, sales is 30 lakh minus fixed cost 15 lakh minus variable cost 7 lakh 50,000. So final answer for company B 7 lakh 50,000. Now done both the calculations. For company A, profit is 5 lakh. For company B, profit is 7 lakh 50,000. For company A, contribution is 12 lakh 50,000. And for company B, contribution is 22 lakh 50,000. Now put these values in the formula. So OL is equal to C upon OP. First, 30 lakh minus 15 lakh. So remain 15 lakh is there. Out of 15 lakh, 7 lakh 50,000 is variable cost. So remaining 7 lakh 50,000 will be the profit. Now clear, beta Jenny? Okay. Now we put these values. Okay. Contribution of company A. Tell me the contribution for company A. It's 12 lakh and 50,000. Very good. Upon profit of company A 5 lakh. Very good. Tell me the final answer. 1250 upon 5. 2.5. Very good. Now, for company B, contribution for company B, okay, 22 lakh 50,000 upon operating profit, 7 lakh 50,000. Final answer for company B, 22.50 upon 7.50. Answer for company B is 3. So calculation of operating profit is now done for everyone. For company A, our final answer is 2.5, and for company B, final answer is 3. Okay. Now we have one question here. Which company has a greater amount of business risk and why? For that, we need to look at to a theoretical aspect. Okay. Now see this slide and para number 1. Read the first para and tell me which company having a higher business risk, A or B. High degree of operating leverage if employs a great amount of fixed cost and smaller amount of variable cost. Already I explained. If the high amount of fixed cost is there, it means high degree of operating leverage, and high degree of operating leverage means risk is more. So our conclusion is company B having more business risk as compared to company A because company B having more fixed cost and operating leverage is also high. Are we clear? वापस से एक बार रिपीट कर देता हूँ पूरा कैलकुलेशन पूरा कंसेप्ट ऑपरेटिंग लीवरेज हमने कैलकुलेट किया है कंपनी एंड कंपनी बी का कंपनी ए का आया था 2.5 किस तरह से कैलकुलेशन किया कंट्रीब्यूशन अपॉन OP here contribution means sales minus variable cost and OP operating profit means sales minus fixed cost and variable cost. वैसे हमने कंपनी बी का कैलकुलेट किया 3 आया. अब हम दोनों को कंपेयर करते हैं कंपनी ए एंड कंपनी बी तो कंपनी बी का ज़्यादा है एज कम्पेयर टू कंपनी ए तो जिसका ऑपरेटिंग लेवरेज ज़्यादा होगा जनरली उस कंपनी में फिक्स कॉस्ट भी ज़्यादा होगी एंड फिक्स कॉस्ट जितनी ज़्यादा होगी उतना बिजनेस रिस्क भी ज़्यादा होगा. The reason is that only because the fixed cost doesn't change with the output or a production of the company. Whether company produce 1 unit, 2 unit, 10 units, 100 units, 1000 units or lakhs of unit, this fixed cost remain fixed. Suppose I have rented one particular classroom for my classes purpose, okay, and I am paying the rent for rupees 50,000 per month, and there is a capacity of 50 students in a class. Now it's up to me if I bring one student, if I bring 20 students, if I bring 35 students, or if I bring 50 students, but I need to pay a 50,000 to the owner in respect of number of students. Are we clear? Moving ahead for the next leverage, financial leverage. Write down the title, financial leverage. Leverage activity which with financing activity is called financial leverage. So if the activity is related to investment, then it is operating leverage. If the activity is related or leverage is related to financial activities, it's related or it's known as financial leverage. Financial leverage represent the relation between companies earning before interest and tax, it means operating profit, and earning ability to equity shareholders. If you look, remember the last concept, operating leverage. Operating leverage represents the relation between change in a sales and change in a profit. It represents the relation between contribution and operating profit. But this financial leverage represents the relation between EBIT, means operating profit, and EBT or PAT, profit after tax. क्लियर है कंसेप्ट? एक लाइन में अगर मैं बोलूँ तो दोनों के बीच का रिलेशन है ईबीआईटी मीन्स ऑपरेटिंग प्रॉफिट एंड पीएटी मीन्स प्रॉफिट आफ्टर टैक्स. वो दोनों के बीच कैसा रिलेशन है दैट एक्सप्लेन बाय द financial leverage. So financial leverage define the ability of a firm to use fixed financial charges to magnify the effect of changes in EBIT on earning per share. So ultimately, financial leverage represents the company's ability to use of fixed charges, fixed cost, okay, and it's help us to measure the effect of operating profit on EPS, earning per share. तो अगर हम दोनों को कंपेयर करें ऑपरेटिंग लिवरेज एंड फाइनेंशियल लिवरेज एक लाइन में, तो ऑपरेटिंग लिवरेज रिप्रेजेंट द रिलेशन बिटवीन कंट्रीब्यूशन एंड ऑपरेटिंग प्रॉफिट, ओके, sales and operating profit, whereas financial leverage represent the relation between operating profit and EPS. Now it's may be a favorable, it may be a unfavorable, depend upon the use of fixed cost. Favorable financial leverage occurs when company earn more on assets purchased with the funds than the fixed cost on their use. Hence, it is called positive financial leverage. Let me explain this favorable and unfavorable financial leverage with an example. Suppose company has purchased the machinery for rupees 5 lakh. Company has purchased the machinery for rupees 5 lakh, and that machinery will be useful for next 5 years minimum. Minimum company can use this machinery for the production purpose for next 5 years. It means on an average company need to earn or to charge the depreciation of rupees 1 lakh every year. Are you with me? Company has purchased one machinery, okay, for a production purpose, and that cost of machinery is 5 lakh, and it is useful for next 5 years. So it means company need to charge a depreciation of 1 lakh every year. Now, while using these machineries, if these machineries give us a return more than the 1 lakh, suppose in the first year, machineries has produced some goods, and by selling of that goods, Companies earn a rupees of 2 lakh. If companies earn a amount of 2 lakh, then we can say that company have a favorable financial leverage, because here the return on assets is more than the cost of assets. Financial sorry, favorable financial leverage clear. जो भी assets, जो भी funds हम यूज कर रहे हैं, उसमें जो रिटर्न मिल रहा है, वो रिटर्न अगर उसकी कॉस्ट से ज्यादा है तो फेवरेबल है. एंड रिवर्स टू दैट, if the return is less than the cost, if the production or sales of goods is less than 1 lakh, then it is considered as unfavorable financial leverage, and also it is known as negative leverage. Write down the formula. Financial leverage is equal to OP, operating profit, EBIT, earning before interest and tax, divide by PBT, profit before tax. Formula done. Good. Alternative formula for finding out the financial leverage. FL is equal to earning before interest and tax upon EPS, earning per share. Now the degree of a degree of financial leverage. Degree of financial leverage defined as the percentage change in a taxable profit as a result of percentage change in earning before interest and tax. So here, this degree of financial leverage represents the relation between EBIT and profit before tax in terms of percentage. If the EBIT will increase by 30%, EBIT will increase by suppose 10%. So if EBIT will decrease by 30%, PBT also decrease by 10%. Are we clear? It's representing the same relationship, same concept, but in terms of percentage. So percentage change in taxable income, it means PBT, profit before tax, upon percentage change in EBIT. Yes, if the EBIT will increase, profit before tax also increase. If the EBIT will decrease, before tax also decrease. दोनों एक ही डायरेक्शन में मूव होंगे, either increase either decrease. In economics language, we can say a positive relation between EBIT and PBT. Now look at the practical question. The capital structure of a company A is given to you. Equity capital 1 lakh, 10% preference capital, 8% debenture for rupees 1 lakh and 25,000. The the present EBIT, earning before interest and tax, is 50,000. Calculate the financial leverage, assuring that company having a 50% tax rate. So capital structure of company is given to you, equity, capital and debentures, plus EBIT is given to you, and tax rate is also given to you. Okay, first of all, tell me the formula for financial leverage. क्या थी फॉर्मूला उसकी? FL is equal to operating profit upon PBT, profit before tax. Okay. Now here, OP is given to you, earning before interest and tax. OP is equal to 50,000. This is given to you, so no worry about the OP. We need to find the PBT. So PBT means we need to deduct the interest from the EBIT, earning before tax and earning before interest and tax. So if I deduct the I from EBIT, it automatically becomes EBT or PBT. So first of all, we need to calculate the interest. So that's why for this calculation, the capital structure is given to you. In a capital structure, we have debentures of 8% and total amount is 1,25,000. Now calculate the interest on debenture. Interest on debenture, total amount 1,25,000 into 8%, will get some amount. It's 10,000 Nishit. It's not 1 lakh. So here interest amount is 10,000. So EBIT minus I is equal to EBT. So 50,000 minus 10,000 is equal to 40,000. Done. Now put these values in the formula. You will get the answer. 50,000 upon 40,000. 1.25. Here the financial leverage for company A is 1.25. I hope so. The second one is also clear. Now the third one and last one, composite leverage or combined leverage. Write down the title, combined leverage or composite leverage. When company use both the leverage, financial leverage and operating leverage, at a time we can say that company have combined leverage. Okay, and in other language, combined leverage means it's represent the change in the sales and change in earning per share or profit before tax. Combined leverage represent the relation between total sales or a change in sales and taxable income of the company. This leverage is also known as composite leverage, combined leverage, total leverage. Now look into the formula. Combined leverage is equal to operating leverage into financial leverage. That's all. Or Other in other language, operating leverage means contribution upon operating profit. Financial leverage means operating profit upon PBIT. So here operating profit is common for both the leverage, operating leverage and financial leverage. So remaining things we have is contribution upon PBT, profit before tax. So two formulas are there. If we multiply the financial leverage and operating leverage, we will get the combined leverage. Or if we divide the contribution by profit before tax, we will get the combined leverage. Write down the formula. Again, contribution is equal to sales minus variable cost, and operating profit means profit before interest and tax. Sales minus fixed cost and variable cost. Formula done. Now this is the exercise number 3. But before that, let's look at the degree of combined leverage. The degree of combined leverage means representing the relation between changes in sales and changes in profit before tax in terms of percentage. So please note down the formula. Degree of operating leverage, combined leverage is equal to percentage change in PBT, profit before tax, or EPS upon percentage change in sales. Done. अगर मैं सीधी बात करूं कि रिलेशन बिटवीन द change in a sales and change in a profit before tax, it is combined leverage. But when I say the same thing with a percentage, it's degree of combined leverage. Now see the exercise number 3. This is very, very important for all of you, because in this exercise number 3, we are going to calculate operating leverage, financial leverage and combined leverage. Okay. Kumar company has sales of rupees 25 lakh, variable cost 12 lakh 50,000, fixed cost 50,000, debt of a company is 12 lakh 50,000 at 8% interest rate. Calculate the combined leverage. So first we calculate operating leverage. Can you tell me the formula for operating leverage? OP is equal to OL is equal to PBT. And finally we calculate combined leverage CL, OP into OL into FL. So your OL, operating leverage, is equal to contribution divided by operating profit. Here contribution means sales minus variable cost. Total sales is 25 lakh, variable cost is 12 lakh 50,000. So ultimately the contribution is 12 lakh 50,000. Here a calculation of contribution: 25 lakh minus sales minus variable cost, 25 lakh minus 12 lakh 50,000. So contribution is 12 lakh 50,000 upon operating profit. Operating profit minus means total sales minus total expenses or total cost. Total sales 25 lakh minus total expenses means variable expense and fixed expense. So 12 lakh 50,000 and 50,000, 13 lakh. So 25 lakh minus 13 lakh. How many? It's 12 lakh. Very good. So 12 lakh 50,000 upon 12 lakh. क्या मिलेगा फाइनल आंसर? It's 1.04. Very good. Okay, now calculate the financial leverage. FL, formula for FL is given to you. Okay, that is OP upon PBT. Here OP is clear. That is 12 lakh, and PBT, profit before tax, means 12 lakh minus interest. Your interest is 8% of 12 lakh 50,000. Calculate the 8%. जो डेप्ट कैपिटल है उस पर इंटरेस्ट कैलकुलेट करो. 8% ऑफ 12,50,000. It's 1 lakh. I'm right. So your answer is 12 lakh minus 1 lakh, and final answer is 12 lakh upon 11 lakh. It's 1.09. Are we clear about the operating leverage and financial leverage? Once it is done, your almost all the calculations are done. Just you need to multiply this OL and FL. 1.04 into 1.09. Final answer. 1.3. I think so. Now the operating leverage, financial leverage, and combined leverage are clear. Concept, formula, and calculation. Now exercise number 4 is your task. You need to complete this exercise. In the next question, I will ask for the final answer, amount of operating profit, operating leverage, financial leverage, and combined leverage. Please take a screenshot. And with this, our concept of leverage are done. In the next class, we will go for the last topic of unit 2, and that is weightage average cost of capital. Okay, so thank you so much for joining. And today we have learned financial leverage, operating leverage, and combined leverage, concept, formula, and practical questions. Write down your enrollment numbers for attendance purpose, and you are free to leave the class. Have a nice day. Take care.